Right, hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Can I get a quick hello, hi in the chat box, administrator, if you can hear me and if you can see my screen as well. Hi, yep. Is that a green light? Can you hear me? Can you see my screen? Sorry, I'm switching between the platform and the chat box. Yeah, okay, it's all good. Okay, brilliant. Okay, hi guys, hope you're well. First live webinar for FX Street for 2017. First of all, Happy New Year to you all. I hope it's a progressive year, a productive year, and one where you achieve success or your goals in trading. And I hope the webinars that I did in 2016 helped to really lay a foundation for what good trading is all about when it comes to us as private traders. As you guys know, I am a long-term trend trader. I really encourage people to get away from day trading and scalping and shorter time frame trading. It can work to a certain extent if you have the right funds in place, but it really isn't the best approach for us as private traders. We want to think differently. We want to think slower. We want to think more methodical, but we also want to embrace compound growth. And this is something that I really tried to push last year, is the real power and the real essence of good trading for private traders involves compounding. If you look at people like Warren Buffett, George Soros, the turtle traders, Jesse Livermore, if you look at all these traders that have generated wealth, they've all done it through compounding. And this day trading approach really has come about because of the internet. With the internet, we've had software, and because of the software, we've had a whole manner of people coming online and saying that quick riches can be made through opening many positions in a day. It's not the best way forward. A lot of people fail through this approach, and you have to question why. Look at what they're doing and do the opposite. Okay, so really 2017 should really be about focusing on the bigger picture and doing less to make more. A lot of the concepts that I explain or use in the webinar are all explained in this ebook. If you haven't got this ebook yet, guys, just email me, zaheer@zaheeranwari.com. It's a free ebook. It's written by an amazing woman called Anne Chapman, who taught me how to trade back in 2007. She taught me pretty much everything that I know about foreign exchange and stocks, along with her partner, Javed Sheikh. These are my mentors, the founders of the Dynamic Trader. And this ebook covers a lot of the concepts that I explain in these webinars. And it's a foundation that must be created if you want to see consistency. I go on the internet and there's a lot of misleading information out there, particularly on technical analysis and good tools, or rather tools, technical tools that should be a part of your daily routine. A lot of these tools are lagging. And I've explained this concept before, that you don't want to clutter your charts with lagging indicators. You want to strip away at all your lagging indicators. Have a few tools that you find useful to help develop a bias in the market, but you don't want to start cluttering your screens. Regular visitors to my charts, to my analysis, will know that I keep my charts very, very clean. And as we go through today's webinar, you'll start getting an appreciation for this. So this ebook, if you haven't read it already, please email me, zaheer@zaheeranwari.com. If I just quickly go through the contents, you can see it goes from a trading bias all the way down to the trading plan, which is chapter 12, and there's 60 pages of information. So you can see that it's a very, very well put together and highly effective ebook. So please email me. I think there's 60 pages, if I remember correctly. Yeah, good 60 pages. So if you email me, I'll get that over to you ASAP. Okay. Beyond that, then there is, of course, training, and we'll cover that towards the end of the webinar. I'll direct you to a few websites. Okay, I was having issues last time with sharing my screen, so I'm just going to make sure that you can see my platform before I continue. So administrator or guys in the chat room, do you mind? Hi, Ron. Happy New Year. Thank you very much. Could you just give me a thumbs up that you can see my charts? Okay, yeah, brilliant. Thank you, administrator. Okay, so let's get into the actual analysis. I did a webinar towards the end of last year. FX Street invited me to do a webinar to sort of, if you like, predict what 2017 was going to be all about. As you know, and as regular guys know, I don't predict. I let price dictate. We don't want to predict because it's a very, very difficult way of trading, trying to guess what the market is going to do next. We want to let the market make its move, i.e. the market show a trend direction. Once the market has shown a trend direction, we then want to go in that direction of the trend. And this is where patience comes in. One of the skills of a good trader is applying patience. You want to get away from the idea of thinking that money is made like a 9 to 5, like a salary. A lot of people try and target a number of pips on a daily basis or a weekly basis or a monthly basis. And that logic comes from the way we are programmed to make money. From a young age, we're told to get a career. So we go through various qualifications, maybe university. There's other ways. University is not the only way. But we then end up in some kind of career. And usually that career, we have a certain amount of contractual hours, and then we're rewarded at the end of that. It could be on an hourly basis, a weekly, monthly, yearly basis. So what people tend to do then is come to the market and they think, why do I need to go to work? Why do I need to put up with my boss? I don't need to have, I don't need to wake up early and commute to work and put up with public transport, etc., when I can sit in front of the computer all day and make money. You've got to question this approach because you're not the only person with this logic. Pretty much every person who comes to the market has the same logic. Everyone wants out the system. I understand that. Everyone wants to be independent. Everyone wants financial freedom. Everyone wants to be in control of their own time. People want more time to do the things that they enjoy in life. Spend time with their friends, their family, have more time to go to the gym, have more time to go traveling. And trading usually then ends up being the answer to being able to achieve that. And trading will give you total empowerment of all aspects of your life, but it's not going to happen overnight. First of all, it's not going to happen if you haven't got money coming through. So the strength of trading is not about replacing a 9 to 5. It's about leveraging a 9 to 5 to a point where you have grown an account that can then fund a lifestyle. So the more money you have coming through, the more you can leverage, the quicker you can grow an account. Now, I'm not saying that a 9 to 5 is the only way you can make money. There's a lot of entrepreneurial people out there who are making good money from selling things on eBay, various ways of generating an income. A 9 to 5 doesn't have to be the only way. My point is there has to be money coming through for you to then leverage through trading. If you don't have money coming through, you're going to find it difficult to make money from trading. Okay, so it's essential that you have the foundation and you then have trading, leveraging your salary to new levels. You can then remove the banking system where a bank is giving you 1%, potentially less, depending where you are in the world. And it will then empower you with not just your money, but also your time. Because when you understand how this works, and when I say this, I'm talking about as a trend trader, my routine, and this is something that's really, really important, guys. My routine starts at the weekend. So the way to look at this is that Saturday to Sunday is my week. Monday to Friday is my weekend. So the logic is totally reversed. Saturday to Sunday, I prepare for the week ahead. Now, I don't spend 2 days preparing for the week ahead. I've got good software. I'm experienced enough to understand what the markets are doing. For me, preparation takes about an hour. I usually do it on Sunday, and it takes about an hour. With that preparation, where I've gone through my software, I've used scanners, I've built watch lists, etc., Monday to Friday takes me no more than 10 to 20 minutes a day. Because of the preparation I've done at the weekend, I know exactly what I'm looking at. What does this mean? What this means is that it can be adapted around any lifestyle. If you've got a job, you can adapt it around that. If you run a business, you can adapt it around that. If you've got kids, if you're married, whatever the situation may be, if you travel a lot, trend trading can be adapted around that in minimal time, but crucially without compromising on profit. And in all honesty and in reality, the profit that is made through holding and compounding your positions is far larger and far consistent than day trading. Okay, so how do I do this? How do I break down the charts to allow me to then adapt it around trading? Now think about it. The point that I wanted to make here, guys, which I haven't made, is that when you get to a point where you can then quit your job and walk away from the 9 to 5, that time element doesn't change. The 1 hour preparation at the weekend and then the 10 to 20 minutes a day in front of the screen, that doesn't change. So if you no longer have a 9 to 5, once you've done your hour preparation the weekend, the 10 to 20 minutes a day, Monday to Friday, you have the whole day free to yourself. That is your goal. That is what you should be aiming towards. You shouldn't have to sacrifice sitting in front of the computer, chasing pips, staring at charts all day for money. Trading is not about compromise. Trading is about taking control of every aspect of your life. I don't understand why people want to stare at the screen. I'm getting bored just looking at this chart. And I'm sure you're staring at the screen, listening to me, looking at this chart. There must be an element of boredom kicking in right now. So how people do this all day, every day, then on the lower time frames, then dealing with all the intraday noise and volatility, I really admire those people, because that's pain, that's punishment you're putting yourself through. I really admire you guys when you can actually step away and eliminate all of that from your trading. Okay, so enough of that. Let's actually get into the analysis and really focus on what we should be and hopefully seeing in terms of moves in the market going forward through 2017. So let's build up the charts. We've got the watch list in the top left corner, an extensive watch list. Aussie dollar, US dollar at the top, goes all the way down to the South African rand, Japanese yen at the bottom. I've got everything on my watch list. You don't want a small watch list, you want a big watch list. I will direct you to a blog that I've written that will explain the importance of having a big watch list. It's on my Medium website, my Medium blog site, medium.com. Okay, then we got the monthly chart in the top right, weekly in the bottom left, and the daily in the bottom right. So instantly I'm looking at the bigger picture. There's no 4 hour, 1 hour, 15 minutes. None of that. It's simply the larger time frames. Monthly is where I look for support and resistance. Weekly and daily is where I look for trend direction and alignment. So let's start with the monthly. Right, first and foremost, I'm going to bring up these pink lines. Now, what do these pink lines represent? These pink lines represent, as we are now in 2017, these pink lines have now adjusted to give me the high, the low, and the closing price of 2016. Okay, so these are the annual levels of the previous calendar year. This is the highest point of 2016, the lowest point of 2016, and the closing price of 2016. Why are these levels important? These levels are important because I'm looking for price to be trading outside of these levels. If price is above the high, it has a bullish bias. And if price is below the low, it has a bearish bias. So above, I'm looking for long opportunities. Below, I'm looking for shorting opportunities. If price is inside, I stand aside. And this is why it's important to have a big watch list, because you can then move to what's trending and what's consolidating. If you're just focusing on the Aussie dollar, US dollar all the time, you can see right now that you're trading it at a time which is not favorable to you. Trading is about probabilities. You want to be able to decipher high probability environments. Something as simple as what I've just shown you will be able to tell you whether you're in a high probability environment or not. If we compare that to pound, you can see that the pound dollar is trading inside of the annual levels. Now, a point to note here is this. If I just remove that. Okay, so a point to note is that these levels here, the high, the close, and the low, these are for 2016. These levels here, the high, the low, and the close, these are for 2015. I want to give price at least 1 month to react to the new levels before I take them into consideration. So I don't look at those annual levels from January to January. I look at those annual levels from February to February. So at the moment, I'm ignoring these current pink lines, and I'm looking for price in relation to the 2015 levels. And we can see that price still has a bearish bias. Now, if I go back to the Aussie dollar, US dollar, if you look at the Aussie dollar US dollar, we can see that the Aussie dollar US dollar is not only trading inside the 2016 levels, it's also trading inside the 2015 level. So this is very much in an area of consolidation. And if you look at price, it's consolidating anyway. This is a trend. This is a consolidation. It's quite clearly visible to see that price is telling us what kind of market we are in. Okay, now let's go to the weekly and the daily time frame. The weekly and the daily is where I look for the 200 simple moving average and the 50 simple moving average, and I have the same on the daily time frame. I've got the 200 simple moving average and the 50 simple moving average. The 200 moving average gives me the overall bias of the market. Now, if you're not aware of this, the logic to this comes from before the internet. Old school traders used to draw charts by hand, so they were very, very selective with the information that they put on their charts. It's not like today, us modern day traders, we have a massive advantage with the software doing a lot of the work for us, i.e. calculating and plotting moving averages on the chart. But just because the software does the work for us doesn't mean we have to lose the philosophy and the essence of good trading. Institutions use the 200 simple moving average in exactly the same way today as they did before the internet. The 200 moving average gives you the overall bias of the market. What that means is if price is trading above the 200 moving average, price has a bullish bias, and if it's below, it has a bearish bias. We want the same on the daily time frame. So whatever the weekly time frame is doing, we want the daily time frame to be doing the same thing, i.e. alignment. So if the weekly is below the 200, we want the daily to be below the 200. So if we look at the Aussie dollar US dollar, we can see that price is trading below the weekly 200 and below the daily 200. So we have alignment. The 50 moving average is a proven area of support and resistance. We can see that price is trading below the 50 on the weekly and below the 50 on the daily. So the weekly and the daily are actually looking pretty interesting in that they are both time frames are below both moving averages, exactly what we want. However, because price is trading inside the pink lines, we want to stand aside. So what is my projection, if you like? Well, first of all, I don't have a projection. What I would like to see is the bear trend continue. Remember the expression, the trend is your friend? Well, what I would like to see is price clear below the round number 0.7, clear below this whole support zone. Once it clears below this, I would then like to see price move towards a round number 0.6 and 0.5. If you look to the left, 0.6, support level. If you look to the left again at 0.5, support level. Let's understand the psychology behind round numbers. If you're jogging and you get to 10 kilometers and you're feeling good, your heart's still good, your stamina's still good, in your head you think, well, I'm going to try and get to 15 kilometers or 20 kilometers. But you're going to use each round number as an incremental stage. So 10 to 11. So in your head you want to get to 15, but you may not make it to 15. But you're going to try and target round numbers, 11 kilometers, 12 kilometers. Now at 12 kilometers, you may get past it, you get to 12.2 kilometers, but you're not going to stop at 12.2 kilometers. Who stops at 12.2 kilometers when they're jogging? Once you get past 12 kilometers, your target is to hit 13 kilometers. And maybe at 13 kilometers, that's it for you. But it's a round number and that's an achievement. You want to look at price in the same way. Psychologically, because it's human emotion that moves the market, price doesn't stop at just a random level. Price likes to move towards these psychological levels. So we want to see price move towards 0.6 and 0.5. Those are how I allow my winning trades to run. Once I'm in a winning trade, I look for price to move towards these round numbers. Move away from having a fixed risk to reward ratio. It's a very, very difficult way of trading. Let your winners run. And as your winners start returning your profit, start compounding into them. Start adding more short positions if you're going short. Start adding more long positions if you're going long. Look at this chart, guys. Look how long trends can stay in play for. Look at this trend to the upside. 2001 to 2004. That's a 3-year trend. Then it went into consolidation. And then it went from 2006 to 2008. There's another 2-year trend. Then we had this big move to the downside, as you all know, the crash of 2008. And then if you look at this big move back up, 2009 to 2012. Okay, it's another good 2.5, 3-year bull run. Then price reached a high point, and if you look at the bear run, this is from 2012, where there's a bit of a consolidation here, and then from this point here, 2013, all the way through to 2015, another 2-year run. Okay, a bit of consolidation, but my point is that these trends can stay in play for long periods of time. Get away from thinking that markets don't trend anymore. What they do is they trend in periods. And if you're looking at the euro dollar or gold all day long, then you're going to miss out on trends elsewhere. And it's because you're missing out on these trends elsewhere and you're looking at a small watch list, which is why people have this idea that trends don't exist anymore. Last year, while everyone was obsessed with foreign exchange, the stock of Nvidia was my top performing stock. So not only do trends appear in foreign exchange, they also appear in stocks and commodities, which is why you want to have a big watch list. Okay, so Aussie dollar, US dollar is not a currency that I want to be trading until it breaks out of the pink lines and ideally to the downside. And then if I open up the weekly, when price breaks this support level, that is when I will start looking for shorting opportunities. If I just bring up my horizontal line. Okay, right there. Once this support is cleared, that's when I will start looking for shorting opportunities. And until then, I'll be standing aside. Okay, now let's move on. Let's have a look at some of the other currencies that are looking interesting. If we look at the US dollar, Canadian dollar, Canadian dollar, bull trend, correction, and now a bullish run back to the upside. If you look at the weekly, above the 200 and above the 50, above the 200, and as of now, trading below the 50. But if you have a look at the structure of this trend, guys, you can see that it's trending, but it's a very slow moving trend. And this is something, again, that people need to be aware of, is that, okay, if the market is in trend, is it in a fast moving wave or a slow moving wave? If you compare the US dollar, Canadian dollar, so you can see quite clearly that it is trending up, but in a very slow fashion. Pullbacks are deep, it's finding support, then bouncing back up again. If we go to the pound Japanese yen in comparison, you can see actually a better example would be the Turkish lira. If you look at the Turkish lira, you can see how this is moving. Apart from this bit of correction here, this is moving in a very quick manner. So this is where people need to start really becoming more aware of what price structure is all about. There's not a one-size-fits-all rule. I saw some advice given out on social media earlier today, and the advice was have one strategy and use that all the time. It's a very incorrect approach. What you want to do is understand price, understand how to break down price and read price, understand how to know what market conditions you're in. And you then want to have a few strategies in your arsenal. You want to have a breakout strategy, a pullback strategy. You want to have a strategy where you could potentially enter on the bounce of a moving average. So you want to have various strategies in your arsenal, and then based on what price is telling you, you then use that strategy. So you can see the way I am trading the Turkish lira, because I am long on the Turkish lira, is very different to the way I am trading the US dollar, Canadian dollar, and I'm long on the US dollar, Canadian dollar. Now, there is a move to the downside, but this move to the downside doesn't affect me. I'm not panicked by it because I know that is exactly what the US dollar, Canadian dollar is doing. Now, of course, this could be some kind of top and the market reverses and stops me out. That's all part and parcel of trading. Risk to reward. At the time when this market set up, which was at this point here, I entered a long position. My risk was small. My reward, if we go to the monthly time frame, my reward is much larger. Of course, I need to be aware of where the next resistance levels are, but a small risk with a much larger reward. This is what trading is about. Remember the skills of trading. Apply patience. Know how to look for high probability environments. Think in terms of risk to reward. Nothing in trading is certain. People think, I knew that was going to happen. I hear it all the time. It's just ego talking. I knew that was happen. I can predict tops and bottoms perfectly. I hear all of that all the time. Warren Buffett himself says he doesn't predict tops and bottoms. So why would anyone else try and claim that they can when one of the most successful investors in history says that he doesn't predict tops and bottoms? It doesn't make sense. It's just ego talking. Okay, and this is, unfortunately, this is a big part of the current environment we're in, this trading environment, which is ego. It's all about, look at my winning trades, screenshot, put it on social media. It's a fact, guys, that if you're showing your winning trades, you're hiding your losing trades. It's not a business approach. How many people get paid at the end of each month and then put their paychecks on the internet? And if you happen to get a bonus that month for having a good month, how many people snapshot their bonus and put that on all over the internet? No one does that. So why do people do it in trading? Because it's that ego mentality, that win mentality. Hey, look at me, I've made a bit of money. But a bit of money is not what trading's about. Trading's about empowerment. It's about growth. It's about removing the banking system. It's about not having a boss. It's about funding a lifestyle that no other career could give you. And to achieve that, you have to remove ego, because ego will be the way that you will blow your account. It'll end up being a waste of time, your waste of money, and the day your time comes when you have to move on beyond this world that we're in, you don't want to look back and have regret and think, I wish I did things differently. It was too late by then. Now you have time to actually take control of this situation and do things differently. And I mean this from the bottom of my heart, because too many of you guys are wasting your time. I hear it all the time, conversations, people getting the ebook, which I'm happy to send out. And then usually people come back to me and say, oh, I whatever you've shared in that ebook, I do it already. But I'm going to take certain elements and I'm going to adapt it to the strategy that I already have. If you're taking this information and adapting it to a strategy that you already have, what that means is that your current strategy isn't working. You just don't want to admit it. I can see through it. A good trader can see through it. You have to start being honest with yourself. This is a fact of good trading. So looking at the US dollar, Canadian dollar, the fact that this is in a correction to the downside is not something that I am worried about. If it does reverse, I've got no more risk on this table, and I'll be stopped out for no profit, but for no loss. But this is what pot trading is all about, risk to reward. Okay, let's move on. Let's have a look at the euro dollar. Now, again, we know that the euro dollar is one of the most heavily traded currencies in the world. We know that. But just because it's the most heavily traded currency in the world doesn't mean that you want to be trading it. If most people blow accounts and most people are trading the euro dollar, what is that telling you? You want to trade the euro dollar only when market conditions are correct. So if you look, the euro dollar was in trend for several months, handing out very, very, very good profit. This is what is known as a bear trend. Look at where it started, 1.4. Look at where it ended, 1.1, round number. These aren't just random levels, these are round numbers. And here is now an area of consolidation. What we're looking for now, if I just expand the chart, is a breakout to the downside. We can see that price has tried, but it's currently struggling, and that's expected. That's expected at areas of support and resistance. What we really want now is the start of 2017. When the institutions start coming in and really start pushing the market and volume starts coming in, that's when we're going to start seeing trends. At the moment, you want to be standing aside. This is where a lot of people are currently trying to predict what's happening next, and where a lot of people are actually losing money. Once we see momentum to the downside, which is our bias, because trend, consolidation, further weakness to the downside, price is looking to push through. Once it does push through, it's going to move towards 1, 0.9, 0.8. So for now, apply patience. Let the market dictate that breakout. If you look at the weekly, below the weekly 200 and below the 50. If you look at the daily, below the 200, below the 50. So we have alignment. If I open up the weekly chart, if I just get my support and resistance tool, if I just put that there, okay, you can see that price has tried on a few occasions to break through. Each time it's been a fake out, fake out, fake out, fake out, fake out. And this is where a lot of people are getting in aggressive. They're getting in too early, getting triggered into a trade. And when I say too early, normally intraday, so on a 1 hour time frame, maybe they're getting in short only to be triggered out, because if you're trading intraday, then no doubt you have a very tight stop losses and you're getting triggered out. If you're not using any stop losses, that's a very dangerous move, a very, very dangerous move, because there's no guarantee that this is going to continue. The odds are, the probabilities are that this is likely to continue to the downside. But remember, there's no guarantees, there's probabilities. There's still a chance that the market could go against you. So if you're not using stop losses, suicidal move. What you need to understand is how to calculate stop losses, which is where a lot of people go wrong. And secondly, you want to know how where to place these in terms of if it's a pullback strategy, you may have a different way of placing your stop losses. If it's a breakout strategy, you may have a different way of calculating your stop losses. It's an art that needs to be understood. If the pound Japanese yen has an ATR, average true range, of 200 pips a day, just for example, the pound Japanese yen has an average true range of 200 pips a day, and the euro dollar has an average true pips of 90 pips a day, and you use a stop loss of 100 pips on the euro dollar, it may work. You have a good chance that it may work. But if you use 100 pips stop loss on the pound Japanese yen and it has an ATR of 200 pips, 200 plus pips, there's a very good chance you're going to be stopped out. So you need to look at the individual characteristics of the currency or the stock or the commodity that you're trading, and then place your stop loss. You don't want to just have a fixed stop loss, across the board. Trading really is an art that needs to be understood, needs to be appreciated. It really lacks. The reason why a lot of people blow accounts, and unnecessarily, is because it lacks respect. People don't respect what it takes to achieve consistency, to achieve what your goal is. And this is really important, guys. Your first goal in your first year of trading is to make it to the second year. Think of trading as a startup. If you're new to trading, for example, trading to you is a startup business. It's a business. You're going to invest into it. It's a startup. Most startups across the board, most startups fail in the first year. If you have blown an account already in the first year, you've already failed. As a startup, you failed. The advantage that you have is that you're not accountable to anyone. You can just keep on putting in more money into a broker account and blowing it, putting more money and blowing it. The broker's not going to question you. The broker is happy for you to do that. And you don't have anyone to say, I've blown an account. You're not accountable to anyone. But the reality is that if you keep on blowing accounts, you're failing as a startup. Your goal as a trader is to make it to the second year. Once you made it to the second year, regardless of whether you've made profit or not, once you made it to the second year, you should then look for consistency beyond that. These are all skills. These are all things that need to be understood for you to achieve consistency in trading. Get away from free. Get away from all that free information on the internet. There's a lot of bad information out there. Okay, let's have a look at the Euro Canadian dollar, because the Euro Canadian dollar was a currency that I did mention a couple of times towards the end of last year. Still waiting for that to materialize. 1.4, you can see price is currently around that level. If it breaks through the pivot low, then we could see weakness towards 1.3. If you look at the weekly, we can see we're below both the moving averages. And if you look at the daily, we're below both the moving averages. Again, look at how the 50 acts as a level of resistance. It's proven. So we can see came to resistance, pushed back down. We're now seeing weakness. If price breaks and closes below this support level, if price breaks and closes below this support level, then we may be able to start shorting this. So one to definitely keep an eye out on. Okay, let's move on. Pound dollar. I'm already short on the pound dollar. If you look, we can see that, as already mentioned, we're below the 2015 levels. I'm ignoring the 2016 levels for now. More importantly, it's in a bit of a range, and the 1.2 round number is acting as support. So we need to see this cleared. Below both moving averages on the weekly, below both moving averages on the daily. If I open up the daily chart, I went short around this area here. So you can see now that I'm in a bit of profit. What I'm looking for now is a continuation of the bear trend. And I want to see this pivot low cleared. Once this pivot low is cleared, I will then look to start compounding into this. Okay, so definitely one for the watch list, but we need a breakout to the downside. Okay, a currency that frustratingly I've been stuck in is the pound New Zealand dollar. Why? Well, first of all, we can see that we were in, excuse me guys, one thing I forgot to mention are my major levels of support and resistance. So if I just go into the back end, remove the pink lines, these are major levels of support and resistance. The logic behind these levels of support and resistance is explained in the ebook. What you want to be able to do is have a rule for everything that you do. Remove subjectivity. All too often, people draw support and resistance levels based on feeling, based on a hunch. There's no logic to it. We are at a huge advantage. As private traders, we're at a huge advantage. We do not need to follow government rules and regulations, but that in itself is where a lot of people go wrong, because every person, whether male or female, that comes into this industry is an alpha, because you have your own rules to play by. What you want to be able to do is create rules and follow them. Most people try and create rules. Most of those rules are not good rules. And secondly, people are not very good at following those rules. Hence why you have blown accounts. When I started trading, I had no desire to create my own rules. What I wanted were rules that already worked, which is why I went and found a mentor to teach me how to do it. The one advantage that I have, or some of the skills that I have, if you like, or some of my positive traits are that I'm very rebellious, which is why I got out the 9 to 5 as soon as trading allowed me to do. Secondly, I'm very, very curious, because a lot of people told me that trading couldn't be done. Whenever someone tells me something cannot be done, I have to go away and figure out why it cannot be done, and for those people who are doing it, how they are doing it. So I never listen to anyone, because most of the time the people that give out advice are the people who are operating from a point of fear. They cannot do it, and because they cannot do it, they're trying to project that fear onto other people. I never allow that to happen. Never allow people to project their own fears onto you. So I'm very, very curious, and I always make up my own mind. The final point is that I'm notoriously lazy, and I'm a bit of an oxymoron, if you like. I'm lazy, but I'm highly motivated. What that means is that I have no inclination trying to figure things out. But once I've got a good mentor, and once I understand how things work and how they can benefit me, because I'm always looking to monetize. I don't really like doing things that don't make me money. I have to be honest with you. If I start learning the guitar, the first thing I think about is, okay, how am I going to make money from learning the guitar? That's just the way I operate. It's not the same for everyone. I know people like to do things just for the pure pleasure of it, but I like to monetize, or at least try and monetize anything that I do. So with trading, it's the same thing. As soon as I understood how it worked and the benefits, the financial rewards, I started applying myself. There is no shortcut to this. So these rules are all explained in the ebook, guys. These rules are all explained in the ebook, the logic behind this. And you can see that pound New Zealand dollar broke through this support, came back to retest it, and it's on the pullback where I opened a short position. And since I've been entered into this, it's just hung around that. And this is one of the downsides of trading pullbacks, because when you trade a pullback, as always, there's no guarantee as to what could happen next. One of the downsides of getting stuck in a pullback is the market just remain in consolidation. So if you look at the weekly, below the 200, below the 50, and if you look at the daily, you can see here's the downtrend, here's the pullback towards 1.8. I entered around this level here. And since then, the market's gone into consolidation. I've got a stop loss, which is just above 1.8. So if price did come back further, then it gave enough space for 1.8 to act as a resistance level. And you can see it's just been going sideways. Now, remember the logic, guys. The bigger the consolidation, the bigger the breakout. Excuse me. I'm just going to grab some water. Okay, so if you look at the logic, the bigger the consolidation, the bigger the breakout. Now, of course, the breakout could happen to the upside. This is where risk to reward comes in. But what I'm looking for is a breakout to the downside. Once price starts creating new lows, and ideally, once price clears this support level, this is when I'll start adding further positions and compounding into my short positions that are already running. Okay, let's move on. Let's have a look at the dollar yen. Dollar yen, we can see bullish movement to the upside. Let me bring up the pink lines. Okay, so we can see that the 2016 levels are here. The 2015 levels are here. It's all a bit messy at the moment. What I'll be looking for is the 120 level to clear, and then looking for long opportunities. Quite a lot of resistance ahead, so this may not be for everyone. Ideally, we want to see price clear this high point, and we can start looking for long opportunities. Above the 200 and the 50 moving average, and above the 250 moving average. If you look at the movement, guys, fast moving trend, pullback, and we're now seeing a potential correction to the upside. Okay, so patience for now until price dictates what to do next. At the earliest, you want to enter above 120. Remember, round numbers act as support and resistance. There's not a lot of space towards resistance. If it clears this level, start looking for long opportunities. US dollar Swedish krona. US dollar Swedish krona is inversely correlated to the euro dollar. So the euro dollar is going short, Swedish krona will go long. And you can see here, this is where I last traded it. Movement to the upside. Look at where the movement broke out at 7, traded it towards 9, went into consolidation, breakout to the upside. Price is really trying to break through this round number, this resistance here. If it clears this, then price will look to go to 10 and then 11. If you look to the left, there's a high at 11. If it clears 11, then we're in new highs. So a break above this high point, a break and close, end of day. I should really emphasize that point. A break and close above this high point, and I'll start looking for long opportunities. Look at the weekly, above the 200, above the 50, above the 200, and price is below the 50, but it's really the round number 9 that's important here. You can see how it's acting as support. What we're looking for now is price to break and close above this pivot resistance, and that's when we can start looking for long opportunities. If we take it back to when I last traded it, look at this move here, guys. A fast moving trend, very fast moving trend. Look how shallow the pullbacks are. If you compare that to what's happening at the moment, the trend is moving in a much slower way because the pullbacks are fairly deep. But it's the 50 moving average that we want to see act as a level of support. Here, it's breached it. But that's because it's come back to retest 9 and there's been a bounce to the upside. So patience, really. Okay, and the last currency that we'll look at is the US dollar Turkish lira. And you can see long period of consolidation. Bigger the consolidation, bigger the breakout. And look at the movement to the upside. It's trading above 3, where the last period of consolidation is, round number. We now want to see price get to 4. Above the 200, above the 50, so all looking good. Above the 200, above the 50. So the weekly and the daily are looking very interesting. I am looking for price to now break and close above this level. Yesterday, we had a big move to the upside. You can see that price tried to break through it. Again, why you don't want to get in too early. Price actually closed below this level, so this is still acting as resistance. We've had a bit of a move to the downside, as can be expected. But it's ludicrous to think that this is a trend reversal. Everything is suggesting bullish, but price doesn't just move in a straight line. There's these ebbs and flows. The overall direction is bullish. It has a linear structure to it. A break and a close above this level, and I'll start looking to add compounds. I've been long since around this position here. So I'm looking to add further compounds into this. Okay, guys, that is me for today. Those are the currencies that I wanted to look at. I'm just going to have a quick look at the chat box. Bear with me 1 second, see if there are any questions. Hi Lucas. Yeah, nothing you don't know, Lucas, so no worries at all. Okay, I am just going to share the screen. I'm just going to change the screen 1 second, guys. Okay, so you probably can see my social media sites now. Okay, so beyond this, if you want training, if you want to take things to the next level, strategies, community support, live webinars, watch list, training in foreign exchange and stocks, just being around some amazing traders and like-minded individuals. We've got some amazing people in our community. Please check out the Apprentice website. This is tdtpro.trade. It's £99 for a month of training, and you get a lot with it. So start looking to take the knowledge of the ebook, etc., and putting it into application. There's no shortcut to this. Beyond that, please check out my Medium website, so medium.com @Zaheer Anwari. A whole load of blogs on here. So a fresh start to trading in 2017. This is what you really want to read, and also manage a watch list like a hawk, as already mentioned. A lot of information on there, and learn to treat trading like a puzzle. Those 3 blogs I would highly recommend taking some time out to read. You can see, guys, they're all very short reads, 5 minutes, 4 minutes, 3 minutes, etc. But please feel free to look through all the other blogs. I blog on here daily, so please follow and please comment on the blogs. If you're on LinkedIn, please search for me and add me on LinkedIn. I'm on Facebook as well, so please search for me and add me on Facebook. I've got a Facebook page as well, which is facebook.com City Trader Lifestyle. A lot of charts, etc., that go up on here. If you're on Instagram, I'm not massive on Instagram, but I've got quite a bit following, 42,000 followers. That's organic. Please follow me, fx.mentor. And finally, please email me on zaheer@zaheeranwari.com. So it's just my name, zaheer@zaheeranwari.com, if you want the ebook. I'll just put it in the chat box, guys. zaheer@zaheeranwari.com. Please email me for the chat book. Is the yearly high-low indicator built in your platform? Yes, these are all personalized. These are all proprietary, customized indicators. Invest in good software. If you email me, Ron, I'll be able to give you more information on how much it costs. These aren't expensive. Good software costs you around $50 to $60 a month. It's worth, in terms of an overhead for a business, it's a low cost. What people want to do is do it on the cheap. Use broker software because it's free. Use MetaTrader because it's free. Go to some kind of website because it's free. If it's not free, people are looking for the cheap option. There's no alternative to doing things the right way. You can either do it the cheap way or you can do it the most amazing way. Whichever way you choose, you'll get what you put in. There's no shortcuts about this. So please engage me in conversation, and let's get 2017 off to a good start and get your trading fired up the way it should be. Look away from the noise, look away from the clutter, and start trading as private traders should be trading. Okay, guys, thank you all very much. Thank you to Administrator FX Street. Have a lovely end to the week. NFP on Friday. Stay out of the market. I'm not taking any trades until Monday next week. Okay, right, thank you all, take care, bye bye.